Hey everyone, this is Phil at the Laptop Trader on YouTube. Welcome to our community. I'm here to share my experience and give back to the stock investing and trading community one video at a time. Email contact is laptoptraderphil@gmail.com. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed is trading or investing advice. So this channel is just for information purposes only. Thank you for watching. For our July 2023 agenda, hope you all had a happy Independence Day. Here on the Laptop Trader, we're working towards financial independence. So hopefully you can come along for the ride. This month we're going to be looking at using price, volume, and moving averages and momentum in trading. So this month's focus will be momentum. So we're going to look how to see on a price chart the likely areas where momentum should slow in reverse direction. What does slowing or accelerating price momentum tell us about the stock or ETF we're trading? And then in the beginning, we're going to layer in another pattern to our price study guide. We're going to be taking a look at some wedge patterns with an example for you to give you a picture of that. And then finally, we're going to layer in, along with the wedge pattern, maybe a relative strength or weakness. So I've got some charts prepared for that. Again, this is kind of my market approach where I use the 4 stages. Any market, this is what it would look like on a line chart with market price and maybe an overlay of a moving average, for example. And you can see the 4 stages. 1, 2, 3 would be a topping stage, and then 4, which would be a downtrend. This is all review. These first several slides are for review. I've done more detailed videos on this. Then just the different names for the 4 stages, so you guys could read over that. And then we've got what it would look like in the reverse after a stock or a market has kind of bottomed out and has returned to an uptrend, if it returns to an uptrend. This again is for review for new people. This is just a how to read a pricing candle. So I'll leave that there for a few seconds. So if you're new, you can just look that over or pause if you need to review that. Then I think last month or the month before we covered what is a pivot high, what is a pivot low. That kind of works, in my opinion, the best on a daily time frame, a pivot, but it works in any time frame. The only problem is if you get to like a monthly time frame, those can take obviously a whole month to form or longer. So it works really well like on a daily time frame or smaller. This is kind of my main buy setup that I look for. I call it the 3-bar turn, the 3-bar turnaround. Again, this has a great deal to do with location, timing, and other factors for this to actually work, but I use it all the time. So just be an example of a 3-bar turn, where to enter, maybe where to place your stop. Again, other factors would matter, such as is the stock in a downtrend or an uptrend. This pattern works best in an uptrend or a new uptrend. And you would have to consider also the larger time frame to verify that your stop is in a good location and that you also have a good target, a good risk to reward. So for this month's education, we're just going to be taking a quick look at what is a wedge pattern. So this would be an example of a up wedge or a wedge up. And you can see this top line would be considered like a resistance area where price is having a hard time getting through. that area, and as it does that, it's actually making higher low pivots where price is actually increasing slowly on the bottom of this pattern, indicating that buyers are willing to pay more and more over time, and pricing price increases and buying pressure is increasing. And then when it breaks out, you can buy that breakout, or you can buy this pullback area right here. You could, if you had some real confidence, you could buy this wedge as it's increasing in price. That's a little more risky to do that because wedges can fail. It's the example of a down wedge, or a stock that looks like it's going to maybe start to make new lows, versus an up wedge where we're looking for the stock to make new highs. So it's just a reverse. And you could, again, if you're going to short a stock, you could short under this support line, this line here where prices continue to push down through that line. This would just be another example of that. This is just kind of what it would look like on a candle chart or a bar chart. You can see the resistance area. You can see where buying pressure is increasing underneath of that wedge. Then we can see where we had a breakout above the wedge, which you could buy. The safer play is to buy the pullback, or we can see our 3-bar turn buy setup, where price moves back towards the top of the wedge, and then it takes off from there. So that's a little bit safer area to buy versus the breakout. This would be a real example of that wedge I'm talking about. This is Block Company, symbol SQ. I just drew a few lines in there of resistance, and then the bottom of the wedge where price pressure is increasing over the last month or two. So I'll just leave that there for you to kind of show you where we had a transition from a downtrend, at least in this time frame, to a short-term uptrend. So yeah, I think you can see where kind of what I'm looking for here would be an example, a little bit of a turn, not a real clear turn. Then you can see where it broke this resistance line, but there's another resistance line right above that, but that was a real strong candle. But then the very next day it gapped down, closed down. And then on Friday, it actually gapped down a little bit again, but closed up. Left a little bit of a topping tail there, but right at the top of that wedge line. So I would consider buying block kind of over that candle on Monday or Tuesday if that happens. That's just a real life example of that pattern. That's all I'm trying to show you guys. It's not a trade recommendation, but if that's maybe a stock you've been watching, that's what I see in this 6-month time frame. So that is it for the slides for this month. Now let's go to some real charts. And we'll try to stick to our agenda, which is there. So we're going to use, again, using price, volume, and moving averages and momentum. So let's get on with the momentum discussions and a little bit about relative strength and relative weakness. So this is the same company, Block, over that 9-month period. And you can see we're at the left side of the chart here, where prices kind of moved up, pulled back, moved up, had some up momentum, and then totally lost it, went sideways for a month. Then it had this real strong move up. So it was a momentum move up. We had a gap up, and then it closed down. This kind of momentum move up just failed for whatever reason, and then it went to this downtrend. So I don't know if you guys can see this on the chart, but this is a little bit more of a wild stock, first of all. But this momentum move up was so strong that sellers kind of stepped in right away and put in this topping tail bar. And then it kind of went sideways for 3 days, and then it put in a big range expansion candle, this red candle. This to me, this big expansion candle to me was kind of like trouble, like watch out. And then it bounced up. It went up for like 4 days back to the top of that range, and then it sold off again and put a new low. So you can see this momentum was so strong that, and then it just stalled at that point for whatever reason, and then actually reversed. And then it gained momentum to the downside. And you can see that momentum in these large red candles, just like you can see the up momentum with these large green candles. So that's one key to momentum is size of the candle or size of the bar, and kind of where it's taking place. Second clue to momentum is volume. And we can see here in this area, look at the size of this volume on this day. And the size of the candle. So this is a major gap down, big range expansion candle, kind of closed in the middle of the range. And then just the amount of volume on that day was like, according to this, was over 140 million shares were on an average day. It's putting in, I don't know, 10 million shares a day. So you're talking about, you know, I don't know, like 14 times volume on that day. That's pretty excessive. The interesting thing to me about that candle is if we just kind of watch and wait on this chart is that area, the low of that candle was retested here in May. It made a new low in May versus this candle. And also interestingly, on the subject of momentum, look all the way here to the left, we have a red candle with kind of like a shaved bottom or just a solid bottom candle. And that's kind of right where prices stopped at that candle. So, and if we look at this right here, I'm going to zoom in now in May. So we're going to go from a 9-month chart to a 3-month chart. Okay. Come down here. When we look in May, we can see this kind of move down, and then the candles start to get smaller. And then we get this little candle here indicating slowing momentum. We have a green candle, which almost engulfed the red candle. And then we put in a bottoming tail green candle, which kind of goes over the previous 4 candles. So that indicates, at least for the time being, slowing momentum to the downside or potential change of direction. Then we get these next 3 candles, which show, okay, buyers are starting to get more serious. They ignored this little red candle in the middle. Prices moved up and then pulled back again, indicating, okay, there's still sellers present, but then we put in a higher low right here, equal to these other 2 candles. Now you've got kind of 3 candles at a higher low point. So that'd be another indication that momentum to the downside is kind of going away, and buyers are starting to either find value at this price, or there's been somebody waiting around to buy Square that feels this is a good time to buy Square. So now we can just kind of watch and see what happens next. I'm not saying this would be a good buy point for Square, but when we look at that higher time frame and we see that volume spike, that'd be an indication. Another indication would be this blue moving average line. This is a 20-day or 20-period moving average. Well, price is starting to hover around that moving average. I don't know if you guys can see that. And from there, we don't retrace lower. We actually have an increase in momentum. We actually break out of that area and a pretty strong move to the upside. And then we got this pullback. We've got another indication of buyers here, another large green candle. Then we have an indication that sellers are still present with these 4 days down. These are actually gap down days, right? See that space in between there, it's a gap down. And then we get this area here, which turns out to be the next higher low pivot versus this pivot here. So now we've got a lower pivot, a higher low pivot, and another higher low pivot. And we also have some higher high pivots. Here's one and here's another one. So we're starting to get this change not only in momentum from downward momentum to upward momentum or buying pressure, but we're starting to see a change in trend, right? From a downtrend to an early uptrend. So this candle formed on Wednesday of this week. This candle was Thursday, and this was the close this week on Friday. I chose to buy this breakout here on this candle. I felt that candle was strong enough. It had enough buying pressure or buying energy. It closed. It was a closing breakout. I felt, okay, that's a pretty good candle. So I bought somewhere in here, I think 67.50 or 67.90, whatever it was, I paid. So I felt good about that trade. I put my stop under the low of that candle. I could have put it under this pivot, but I wanted to keep it tight in this market. So what happens? Of course, next day, the stock gaps down along with the market. So this was part of a weak market that day. And closes down, stopping me out. Nothing I could do about it, right? And the next day, it actually gaps down again, but closes up and basically engulfs that red day. So this still looks like a viable trade. I would say over Friday's high would be a viable trade. You could take it at about 68 if you want to put your order at 68. Over this candle would be high of that candle was 68.42. So you could always wait for 42 or 43 or 45 and then buy and see if you can get a momentum move out of that. So let's take a look at one more chart. Let's take a look. Let's zoom out a little bit to a weekly chart. So you can see what I'm seeing. So this is the same company on a weekly chart. We've had this stage 4 downtrend. We've been at stage 1 since basically a year, since last June. We've had some buying take place and we've had some selling take place during that time. Recently, we've had a little bit of move up off the bottom, okay? But we've had this major volume spike indicating that basically ending volume to some degree. Although after that candle, which was a range expansion candle on that volume, we did put in a new low. But since then, we've had quite a bit of buying pressure. We've only had one red week in the last 8 or so. And it looks like right there, that week, see if I can zoom into that on a 1-year chart. Let's see, that week would have been right here. That actually gave us a little bit of a buy setup there. So it looks to me like, the bottom is in for square. We've had a higher low, another higher low, and now at the end of this week, we almost have basically like a 3-bar sandwich where those sellers are trapped in between these buyers. And that's generally a bullish sign, along with our wedge pattern where you can just see if you connect these dots, these pivots, you can see that wedge pushing up right there into this resistance area. And it looks like buyers are starting to take real control of that company. And larger green candles should equal larger momentum to the upside. So that is it this week for that lesson on that. Let's go to our watch list. Let's just take a look at some of the momentum in the major markets. This list I put together for you. It's called, I just call it my stock and ETF list. So it's not a very big list, but let's take a look at the major markets and take a look at the momentum for these markets. So here we can see this is the S&P 500 ETF, SPY, and we can see that the overall market momentum has slowed over the past couple weeks. So we had this move up right here. We had a large green candle to end this move. Then we had a red candle, which came down about 50% of that green candle, retraced. So that wasn't too scary. That was almost expected because these prices were extended a little bit. But then we went up almost 100% back to test that area and kind of failed. So now we have, at least in the overall SPY market, we have a double top. It doesn't mean that the uptrend is over, it just means caution. And to end the week, we had a gap down day on Thursday, which again affected my trade in Square. And then on Friday, we ended the week with a topping tail and basically closed the week where we started the week. So that was not, if you were to see that on a weekly chart, you would basically just see a small candle or a doji bar on a weekly chart. So not a very good week for the market there with slowing momentum. Similar in the Qs. I would say not as dramatic, but similar. Although we had a new high here set in the Qs a couple weeks ago. This week we made a lower high. Again, ended the week with a topping tail and a red bar at the rising moving average. So is the uptrend over? No, but momentum is definitely slowing in the two major markets. When it comes to the Dow Jones Industrial ETF, DIA, referred to as the diamonds, we can see a general sideways trend. We did have a momentum move up into the middle of June. Then ended that move with a large green candle and then a large red candle, another gap down, another red candle. Basically gave all these gains in June back. Again, ending the week with Thursday a gap down and Friday a topping tail, another gap down on Friday towards the 50 period moving average. So the diamonds would be relatively weak compared to the other two markets. Hopefully you can see that. IWM, which symbolizes the Russell 2000 index. Similar price action to the other markets. Had a new high in June, mid-June, and basically has given all that back. Again, making kind of a double top here. Gap down on Thursday, but actually closed stronger on Friday than the other markets. So that's interesting. That we had a actually a gap up and a close up on Friday versus Thursday. So I think that's positive because small caps have been beaten down and have kind of tried to play catch up with the other markets. You can see that pretty clearly. Where small caps just have not, or I mean, the Russell 2000 index, which represents a larger share of the market, it's not really had the same success this year as the NASDAQ tech shares and the very strong S&P 500 companies. So you can still see it's kind of in the middle of a range. It has shown some near strength in the last 4 or 5 weeks. I think it's a decent value here if that's something you're looking to invest in. And I can give you another example of an ETF later that's similar to the Russell 2000, but I think it's performing a little bit better if you'd like to buy the market. Now let's take a look again at some other momentum plays, how to maybe look for relative strength and weakness. So again, as a review, The SPY has been relatively strong, but with slowing momentum this last week. Q's the strongest market this year, again, but slowing momentum this week. Diamonds kind of in between. It's kind of forming a little bit of a wedge at this resistance. There's a lot of resistance in the diamonds at the 345 area. But you can see higher low pivots indicating increasing buying pressure in the diamonds. But again, red week and a down day to end Friday. So I would call that relative weakness compared to the other two. And then the IWM broader index actually showing a little bit of strength versus the other three. So let's go to this sector, XLE, which represents the overall energy sector. There's many companies within this sector and many other industries within energy. But I think, again, you can see where we've got this pivot high here, matches this pivot high, so a double top, and then momentum stopped to the upside and actually increased to the downside in energy this year, while the overall markets have moved up. So I would consider energy relatively weak. Although this sector appears to have hit a bottom support area. Last week we put a nice big green bar, and this week we actually put in a bottoming tail bar, even though it closed red. So, while it has shown weakness, it does have the potential to maybe start to perform. So if I was looking for companies within the energy sector, we could just pick a few. Here's one. This is ExxonMobil. And you can see how that performs relative to energy, where we've had definitely some selling in energy this year. So right now, looking at that chart, I don't really like what I see there. We essentially have last 2 weeks a green bar, which looked positive, and then a red bar this week, which kind of negates that green bar for ExxonMobil. And another one I just picked out that I remember, Williams Companies, actually showing relative strength to both not only ExxonMobil, but the energy sector and the market in general. So this had a range expansion breakout bar last week, and this week closed towards the top of that bar. So Williams is actually showing a little bit of relative strength. And we can see accumulation down here in volume. One red week in the last 5 or 6. So that Williams actually looks like it has a little bit of relative strength on a weekly chart. And if you look at a daily chart, it might look even stronger. So there you go. The markets were closing red on Friday. Williams showed some strength. So that looks like a possibility this week. So let's continue our study of momentum. Let's look at financial companies real quick. Again, if you don't want to use a weekly chart, you can use moving averages to speed up your analysis. So here, again, this red line is a 100-period moving average. You can use 100 or 200, whatever you're comfortable with. I'm comfortable with the 100 because I think it's easier to see. But these other two lines, the blue and the green, are the 20-period moving average and the 50. We can see the financials have had a small kind of uptrend the last month, right, from here up to here, with higher pivot lows, coming up to resistance, actually kind of breaking out, but then failing. So this is putting in maybe a little bit of buying pressure. Price is trading above those 3 moving averages now, so that looks positive for financials. Even though they've had a down, even though this long-term trend is down in financials. So let's take a look at a company within financials. Let's take a look at American International Group, symbol AIG. Again, you can see the long-term price average is down, but the near-term moving averages are up, and it looks like price is following that 20-period moving average. I would consider AIG showing relative strength to the market because it didn't really have that sell-off on Thursday, and it closed green on Friday. So that looks positive for this upcoming week and upcoming month. Let's continue on. Here's another one with consumer discretionary, which has been a very strong sector this year. Starting to show some signs of slowing momentum, still in an uptrend, but we're starting to see more red candles, the topping tail candle, a weak new high. I would consider that a weak new high, and then a failure, kind of almost a breakout failure. Gap down on Thursday and a closing with a topping tail on Friday, so that is kind of following the market. So let's take a look at a couple companies within consumer discretionary. There is Expedia Group, symbol EXPE. EXPE is actually showing a little bit of relative strength versus their group, XLY. You can see that on Friday that it put in a nice green candle, closed towards the high. It did suffer a gap down on Thursday like the rest of the market, but it seemed to recover more than the group. So you can also see the long-term moving averages fairly flat, and the near-term moving averages are pointing up, indicating a near-term uptrend. So that doesn't look too bad. Take a look at Tesla, showing some really strong price action in the last several months. Also showing some slowing momentum based on the size of these candles and the fact that they're far from the moving average. And then this weak new high would be a concern to me if I was a Tesla owner, but it wasn't as dramatic of a price move on Thursday and Friday as the rest of the market. So while it's looking a little bit weak right now, I would not count out Tesla, but it looks to me like it's a little bit weaker than Expedia. Picked one more for you guys, Bassett Furniture, symbol BSET. Actually showing a little bit of strength this week. Wednesday we had a nice green candle, kind of a breakout over this area. It show an expansion in range and an inside candle. And then on Friday, it put in this topping tail candle. So that, to me, I would wait on that and see if that pulls back before I would even consider that as an option. So you guys can just see the difference in momentum. Again, Bassett has been in a longer-term downtrend. The 20-period moving average is starting to go up. That's a positive sign for that company. And we've got healthcare, which is more of a, not really a fast growing sector, but more of a staple of the economy, showing, I would consider relative weakness this last week. Really a bad week for healthcare. Pretty much gapping down all week since Monday, closing down at the end of the week. So that's very weak healthcare. I would not consider any purchase this time in that sector. We can take a look at a few companies within that. Cigna, not really showing the relative weakness that the sector is showing, but sometimes stocks that are still strong can be affected by the overall sector. Still putting in a gap down and a lower close on Friday, but not as weak as the overall sector. So Cigna is showing a little bit of relative strength to the sector. It's showing slowing momentum, moving up, but I would say kind of following the market overall. McKesson Group, symbol MCK, showing a nice momentum move up, and then losing that momentum this week, with basically a failed breakout. So that is also following the market lower. But it is still in an uptrend. So that's on my list. Then we've got the technology sector, symbol XLK. Again, probably the strongest sector all year, next to communications and consumer discretionary. And you can see that they put in a pivot high, a new high, new pivot high, but now it's made a lower pivot high. So the momentum in technology is definitely slowing down. It's still in an uptrend, and probably will stay in an uptrend, but the momentum move up is definitely slowing down. So maybe not the best place to be looking for opportunities at this time, but I still don't discount tech because it's been so strong. So let's take a look at a few companies within tech. Here's Uber. It's been a strong performer this year, and it's had a nice move up. It's had a momentum move up based on these moving averages, and it just put in kind of this weak new high last week, and then it did not continue higher. It actually sold off the last 6 days. Although it put in a green candle Friday, it's showing a little bit of strength to the sector in the market. So I would not count out Uber, but I would wait to see if it pulls back a little more before considering a purchase in Uber. There's another tech company, Dropbox, has had a nice year. It's got a flat long-term moving average, which indicates kind of that stage one. It looks like it's come out of stage one into stage two. Dropbox is showing relative strength to the sector and the market. I would consider a buy in Dropbox at this time, as long as we saw prices continue to move up this week. That looks really good. That actually closed above everything this week, even though it put in a topping tail in the green bar. So Dropbox is showing some relative strength. It doesn't look like it's had a major slowing of momentum. I don't see any really range expansion candles, so it looks like Dropbox looks higher. Microsoft, which has been a market leader, so you would expect this to either lead or follow the market, but it definitely has slowing momentum with increasing prices. It's got a high, a breakout, and then a new high failure. Microsoft is just a strong company. I would not expect it to pull back too far, but it could pull back. So right now, that's a watch. And one final sector, and we'll end this video. I hope you guys are getting the point of how to look at momentum with moving averages, the size of the candles, where they're taking place. And hopefully I'm explaining this the best I can. But this is the ETF sector of semiconductors, which again has been one of the strongest sectors, if not the strongest industry this year, led by NVIDIA. Again, you can see this momentum move up, pivot high, and then another momentum move up, kind of a double top, weak new high, and then sold off. And then we have this large green candle here, which didn't do much, and we've got a new pivot high, low, new higher pivot low, or lower pivot high. So you have this pivot high, and now a lower pivot high in semiconductors with end of the week with a gap down on Thursday, and then a topping tail on Friday. So slowing momentum in semiconductors and tech. AMD within that sector showing relative weakness to the SMH in the market. You can really see the momentum in this one change at the top there with the large red candles, the amount of red candles, and now prices trading below the 20-period moving average. Again, AMD is a fine company, but we don't make money on what we think of these companies. We make money on price. So this one is, the uptrend is definitely starting to come into question in this one. Micron has been one of the weakest, if not the weakest, major semiconductor. It had a momentum move up and then it just totally failed, putting in a new high, but then putting in lower pivot highs over the last month. Looks like Micron may be making close to 3-month lows and just not doing well. So that is definitely showing relative weakness and increasing momentum to the downside, I might add. So that is one to stay away from, in my opinion. NVIDIA, arguably one of the top, probably 5 strongest companies this year, has had unbelievable price appreciation, but slowing momentum to the upside. You can see more and more red candles coming into NVIDIA, range expansion candles. Price is still following the 20-period moving average, but we're starting to get these in-between candles, topping tail candles, and not making new highs. So this was the high point, and looks like this could be potential rollover or more consolidation in NVIDIA. So I think we'll end it there, guys. Hopefully that was helpful to you to try to maybe how to segregate different markets, different sectors, and companies within those sectors, how to use moving averages, how to use momentum in your trading to kind of make some good decisions as to what to enter, maybe what to exit. On something like this, if I had slowing momentum, I would be raising my stop if I had a stop, right? So let's say I bought the stock back here, April at 270, and now it's 425. Well, to prevent myself from giving back all my gains, maybe I raise my stop to, under this area, or maybe I raise my stop to the 50-period moving average and just in my plan say, look, I'm not willing to give back anything below, 359 or 360. I'm not willing to give back my profits below, these 4 or 5 candles here below 374. So that's another way you can use your stops, and momentum is to retain some of your profits that you worked hard for. So it's just putting your money to work and keeping track of what you're doing. I think that will end the July 2023 laptop trader video. Again, thanks for watching. Please consider subscribing so you get the latest updates from Phil at the Laptop Trader. Again, my contacts, laptoptraderphil@gmail.com. If you have any questions, good luck in trading, and we will see you in August. Have a great summer, guys. Bye now.